welcome back to our YouTube channel. Our topic for today is to understand the key differences between futures and option. This is one of the common questions being asked. So today we are going to differentiate between futures and options. Once you understand what is futures, what is option, and their main differences or key differences, then it's easier for you to make a decision when you need to trade futures, when you need to trade option. Especially the worst scenarios is because futures and option both are derivative products. So this is one of the common questions I was being addressed. So we are going to differentiate these important topics for today. Now, before I start, as usual, if this is your first visit, please remember to subscribe to our YouTube channels and on your notification bell so that you will not miss any of the interesting topics or important topics. Now, before I start, we need to do a quick disclaimer. Now, today's topics is only meant for education purposes. There's no buy call or sell call. My name is Ting Ting. Before we understand what is the main difference between futures and option, we need to understand what are futures and what are option as well. Or in a way, what is futures and what is option? You should understand futures itself is more standardized. It's a more standardized contract. What is standardized? Standardized meaning that, for example, they already predetermine telling you that this contract itself, if you are going to buy a pen, you must minimum commit 1,000 pens. At what price? When you need to execute this contract itself, or when you need to deliver, for example. But option, on the other hand, is more flexible, which upcoming I'm going to differentiate the three main difference between futures and option to ease your understanding. So in short, futures is a more standardized contract, but option are more flexible. So once you can understand the main difference, then you will know which one to choose. So I'm going to conclude which products that you should choose when you are going to trade in futures or in option, or when you are going to trade futures, when you are going to trade options. Now, the first key difference between futures and option is what we call as obligation. It doesn't matter you are a buyer of a futures or you're a seller of futures contract, you are obligated to exercise it, meaning that, let's say for example, I want to buy these pens. Once I'm in the contract itself, or I buy the contract itself, or I went into the agreement, I need to exercise it. Let's say for example, if telling me that, let's say I buy at 4,000, I'm going to, once the price reach 4,000, I will need to buy it. I'm obligated to do that. But as the name itself, the option, you should know that when it comes to option itself, I still have a choice. For example, if I'm a holder, I pay a premium. Once the market reach the time that I need to exercise it, if the market against me a lot, I can choose not to exercise it. It is not obligated for me to exercise it. So meaning I have the choice. So when it comes to option, can you see the terms English itself? You have more choices in a way. But when it comes to futures, you are obligated to perform it or to exercise it in a way. Now, the second main difference between futures and option. No, but before I continue, I just want to highlight one thing. If you do not know what is futures and option, you can scroll back to our previous videos. We do have some session, an introduction about futures and introduction about option itself. Then you can understand better for you to continue with this particular slides itself. Now, for futures itself, in terms of risk and reward, they have unlimited. Why? You can see when you buy a futures contract, your upside is unlimited, your downside is unlimited as well. They come in tandem, definitely. So you have unlimited risk, but at the same time, you have unlimited reward. You can make a very huge profit, but you might be suffering huge losses as well if you do not know how to manage it. But on the other hand, for option itself, they have limited risk and reward. For example, if you are a holder or you are a buyer of an option, you can choose to only commit the premium part. As I mentioned to you, let's say your premium is like a deposit, right? When you deposited it, if the market going against you, you decided not to exercise it, you can remain on this particular part. So your risk is only subject to this premium itself. So this is the main difference between futures and option. Now, the third differences is what we are looking at is in terms of liquidity and flexibility. Now, futures, they have higher liquidity because one of the reason is when you go with this higher, the liquidity parts, it's like, you see, when you have more option, futures itself, the standardized contract limited the option itself, the choices for you to choose for the contract itself. So when everyone have this limited option, when we have, let's say, the similar number of clients, you have 1,000 clients, definitely they are choosing among these three options. Am I correct? So every option also we have high clients into it, many of the clients in those options. But when it comes to option, their liquidity is lower. Because why? They have more flexibility. You can see they have a lot of different contracts because different premium, different expiration date, you have more option. So when you have, let's say for example, 10 option, then but you have also have 1,000 clients. When you diversity, you're going to see that your liquidity getting lower and lower, but you have higher flexibility. Can you see the difference or not? Another layman explanation is like if you are having an airport, if in this airport or in the mall, we only have 3 restaurants. Everyone, all the visitor to this mall or this airport, they need to select in between these 3 options only, or these 3 restaurants only. So you're going to see that the liquidity will be high because everyone is waiting for another person to finish it and just leave the restaurant, then you can have the table. But when you have more flexibility, meaning that you have more different restaurants, let's say you have 100 restaurants, then you're going to see that those visitors are more diversified. So the liquidity will not be that high. So these are the main 3 differences between futures and option. Once you understand this, definitely you will be able to answer this question. Which one should you trade? Easily, because once you understand the nature of it, you understand the main differences, then you should be able to answer. So I hope that this particular video I prepare for those who keep on asking me this question. I believe many of you is because you never involved in futures option, or you only involved in stocks, or you only involved, you did not even start in your trading. That's why you will this is one of the commonly being asked question. So I hope that this particular slides, once I explain to you, you will be able to understand their main differences. Then it's easier for you to select which one should you go with. Because each product, any of the products itself, they have their own risk and their own returns. So it really depends on our own risk tolerance level, our own objective. And in certain circumstances, you must combine both to even you can maximize your profit itself. Many scenarios that we combine stocks, futures, option together, you can see that the whole strategies is even more perfect. You're more, in a way, more covered in terms of your risk. For example, you can reduce your risk at the same time you can increase or maximize your profit. So I hope that today's session will help you a lot in terms of making a decision whether which products that you should trade or which economic cycles that you should use which products. So before I end, please remember to subscribe to our YouTube channel and on your notification bell. I'm going to see you in our next video. My name is Ting Ting. Bye bye.